I'm Professor Ansari. I'm the Gateway Coordinator, and I really appreciate Professor Stone, who's not even teaching 301, coming down Friday evening. Well, he owes me a favor because there we go. Ron's actually a former student of mine, back from the days when I was younger and I had a lot more gray hair than I do today.
Hey.
It's all the stress that has caused my hair to go black. So Ron owes me from there, so I felt free to call on him to help us out, which he did, and that was...
Actually, I was in 2 of your classes.
That's right. So anyway, we have a limited amount of time, as you have discovered. So what I will do is I will take some questions from you in the second half. But in the first half, what I wanted to do is, first let me give you the good news. On management accounting, the top 10 concepts, 4 and 6 are not being covered on the particular test, so you don't have to worry about that, okay? 4 and 6.
Chapters
So
4
look at
and
that list
6?
of top 10 concepts. Number 4 is the different production methods, mass versus mean, and 6 was activity-based costing. So we are not covering that this semester because there is, people don't have uniform coverage across the sections and across the community colleges. So that's not being covered now. Again, based on the item analysis, what I would like to do is to review with you the items that students typically get wrong, like the present value, future value questions, which were actually quite simple, but as you saw, for some reason or the other, it's a learning for us as well as to why this is happening, but that's where the common errors are. The 3 areas in managerial accounting that surprisingly cause some problems that I would like to review, which I think would be very useful, is, first of all, a lot of people got questions that were pretty straightforward having to do with terminology. So apparently you've forgotten, and I would suggest that you go back and review the basic cost terms. For example, understand and review carefully what the term fixed cost means. What does the term variable cost mean? What does the term, and what is the difference between a cost and an expense, and so on. We will talk about this particular concept in a little while, but another cost that gives people trouble is the notion of a direct cost. Some people mistake a direct cost to be the same as a variable cost. Does anybody here understand what the difference is between a direct cost and a variable cost? Can you give me an example of one? Suppose you produce 10 units, right? Suppose you are a manufacturer and you are producing, let's say, chairs, and you produce 10 chairs. Now, give me some examples of things that you think are variable with respect to production and things that you think are fixed. Labor. Which kind of labor? Any labor? Human labor. There are a lot of people working in a factory, right? Which particular labor are you referring to? Production labor. Also, let's keep it simple. It's often called direct or touch labor. People who actually touch the product. So it is not supervisors, it is only people who touch the product, and the terminology for that is direct labor or touch labor. Okay, now that will vary. So if you have 10 chairs, you need X number of workers. If you have 20 chairs, you have more workers. Okay, that will vary. What else do you think might vary in this chair? Material. If you have 20 chairs, you need twice as much material, right? Okay, so that will vary proportionately. Now give me some example of costs that will not change whether you go from 10 when you go from 10 to 20. Rent for the facility, correct? It's what we call a fixed cost. Okay. Now, let me ask you the following question. Let me talk about the production of. We're talking about. Let's say we have a building, and we rent this building, and half of this building is used for the factory and production, and the other half is our offices. So we have our sales and general administration offices in there, right? Now, what are the costs that you can identify directly with the manufacturing facility? You can identify materials to manufacturing. You can identify direct labor, right? You can identify rent or not.
Yes.
Half of the rent could be a direct cost of rent. Only half the rent, not all of the rent, because the other half is being used by sales and administration, right? So a direct cost is a cost that you can uniquely be identified with a cost object. Okay. Now the term cost object is very important. It means you have to first decide what your cost object is. Where we produce? No. A cost object could be a product, a service, a department, a division, an activity. For instance, sometimes the question we are interested in asking is, what is the cost of producing this chair? Right? Other times you might be interested in asking about a function. How much does our production facility cost us? All of our production. Suppose we make chairs and tables and desks and all kinds of furniture. We may be interested not just in individual products, but in the entire production facility. Sometimes one of the things that we do is we deliver. One of the activities we do is we deliver chairs, right? We may be interested in what does it cost us to deliver chairs. That's an activity cost. So a cost object can be anything, could be a product, a service, and be certain. When you are talking about a direct cost, you must be clear first and foremost about what is the cost object which you are dealing with, and given that cost object, you can then decide whether a cost is direct or indirect. And the key magic word you have to remember is a word called traceability. If the cost can be traced uniquely to a cost object, it becomes direct. If it cannot be traced, it is indirect.
So you define direct cost as a cost that can be traced directly to the
To a cost object, that's it. That's all it means. Traceability is the key. Now, if you have a president's salary of the corporation, you really cannot trace it uniquely to manufacturing or to sales or to administration because he or she is heading this entire operation. So they can be traced directly to manufacturing. You can say there is some part of that salary that has gone into this chair, hasn't it? Because you have to recover that cost when you sell that chair, but you cannot say, like we said with material and with labor, you can say how much material went into this chair. You can say how much labor went into this chair. But you cannot say how much of the president's salary went into that chair. Some of it did, but we don't know what. Because it is not a cost that can be directly traced. It doesn't have this simple one-to-one relationship. Right? Yes.
Unlike rent on a space where you can identify this much of the portion of the building is identified to the direct cost. You can trace at least that portion.
If it can be directly identified, let me ask you a simple question. Suppose this is our manufacturing facility, correct? Now, this is our manufacturing facility, and we offer a lot of classes in this room, 301, 497, etc., etc. Can you trace the cost of running this room directly to any particular class?
No.
Or is it common to all?
Well,
Right? There are lots of classes that are held in this room. It's not just 301, it's 497, it's this, that, business law. You cannot trace because it's a common cost and you can't uniquely say this much of this room is 301 and this much is 497.
Unless you say that only 301 and 497s are only held in this room.
But there's still two products.
But
So
if you
direct to
say,
what?
well, if you say that half the time it's used for 301 and the other half time is used, you couldn't even do it that way?
No, first you have to define your cost object.
Okay.
What is your cost object? Do you want to know the cost of 301? Is that your cost object? Or do you want to know the cost of 301 plus 497? If that's your question, you're right. Well, only two classes are held here, 301, 497, then I can assign all of this room's cost to 301, 497. But if the question is, what is the cost of 301, then you cannot break it out because this room was also used by 497. And that's why the cost object is very important, yes.
So why did you consider half the rent as direct cost?
Because I can identify half of the building uniquely with only production. Only production happens in half the building. And therefore, if I stop producing, I can shut off half the building and sublet it. You see? So
there has to
this
be
was-
certain assumption
that
for it
was
to be
no-
direct.
Well, that's right. So I said to you, when I started, my statement was, half of our building is occupied by production, and they produce the product there, and the other half is our offices. So because I said that to you, I told you that half of the occupancy is there, so it's the same issue. If I said to you, only occupants are 497 and 301, and the question then is, what's 301 and what's 497, then you can't separate. But if you are questioning 301 plus 497, then it's okay. So in the case of manufacturing, we have a clear line of demarcation. Half of this facility is used by them, only they use it, so only 301 use this room, it would be easy. Then you could say, you know what, if we don't do 301, we could close this room down. Or we could rent it out to somebody else in the university because we have an extra room now. Theoretically, I mean, we don't charge rents in the building, but there is a rent, implied rent, because if you have an extra room that is not used, then of course you will have to build an extra room somewhere, so there is a cost attached to it. So there is an implicit rent even though we don't pay each other rent. The point is, anytime you have a spare room, you can say that means that the chemistry department or the School of Education will not have to build an extra classroom because they are expanding, we have an extra room, you can. That's what makes it direct. Another term that you might have forgotten, but I want you to remember, is the term prime cost. Anybody remember what prime cost means? And? Okay, that's good. Direct material plus direct labor are often referred to as prime costs. And a lot of people have forgotten that and got that simple question wrong. It's really an easy one. I think we thought we were being kind to you. When we found out we were not being kind to you, so let's put an easy one on that test. And then we found out that was not being kind to you because it was an easy question, but a lot of people have forgotten. Okay? Same thing happened with another term, conversion cost. What does conversion cost include? Direct labor and factory or manufacturing overhead. There are three elements of what we call manufacturing cost. When you're manufacturing a product, there are three costs: material, labor, and what we call overhead. Overhead includes your facility, rent, heat, light, fuel, all of those other things, correct? Now, those are the three major elements of cost that go into manufacturing. Terminology-wise, these two are referred to as prime cost sometimes, and these are referred to as conversion cost. Nothing big deal, no big deal. So if there's a question that says 1,000 in material, 2,000 in labor, 5,000 in overhead, what's the prime cost? Add the first two. What's the conversion cost? Add the last two. Right? Everybody with me? Yes.
We're gonna get into drivers and all that when allocating.
We are, you can, but we have already omitted number 6, so if you want to stay back, we can go into drivers. But it's not on the exam.
Good.
Okay? All right. Another key item related to the terminology and cost flows are concepts like the cost of goods manufactured and the cost of goods sold. So understanding what the difference is between cost of goods manufactured and cost of goods sold. So let's take a simple example and go through that for a moment. First item that we know that goes into manufacturing costs is direct material, correct? Direct material is also an account that has what we call an inventory, right? So if you are a manufacturer of chairs, think about it, you will start with an inventory of materials, which would be the plastics and the cushions and the screws and all the materials you need to produce, correct? So direct materials typically start with a beginning balance, correct? Because in any period, you have some materials that you will have on hand. Then, you will increase that amount through purchases of materials, correct? If you purchase more materials, that amount increases, correct? So let us say that we started with $10,000 in inventory at the beginning of a period. We started with $10,000 in materials inventory. We then, let's say, purchased $80,000 in more materials. Then, at the end of the period, when we stop the period, we will also have something that will be left over, right? And let us say that we had, at the end of the period, we have $15,000 in raw materials that are still in our inventory, right? So what happened to the difference? What happened? How much did we use this period? So if the question asks you, What is the amount of material used in this period? The answer is 75,000, correct? All right, so far so good. Everybody with me? That's the, okay. Now, when we know that we used means what in this case? Did we heat up the plastic or what did we do? We started production, right? So what happened to this material that was used? Where did it go?
It was used up in production.
It's used for production. That's the physical part of it. We all understand that. Do we remember the accounting name for it? What is it called? Sorry?
Work in process?
What?
Work in process?
Work in progress, because it isn't finished. Work in progress or work in process. Because materials, when you start working, don't get done immediately, right? So what happens is that you have another account that is called a work in progress.
That's
Now,
$15,000.
we know that $75,000 in raw materials, the materials, direct materials used are part of work in progress. That's what went into this, correct? We know that. Now, also, what else do we introduce into the manufacturing process? We order materials, we introduce direct labor. Not labor, direct labor. Be very careful, otherwise you may run into difficulty. Because if it's any kind of labor, that's not what you're putting in there. Only direct labor, people who touch the product, who make that product, okay? Let us say that we paid $100,000 in wages to people who are manufacturing these chairs during this period. So far so good, you with me? All right. What else went into the manufacturing process? Overhead. What does overhead include? Utility, heat, light, fuel, rent on the office, the supervisory salaries, the people who are not touching the product, but they are still part of the manufacturing. So all those other costs, supervisory salaries, heat, light, fuel, building, rent, space, property taxes on the factory building, all of those things rented, right? And that is what we call collectively factory overhead or manufacturing overhead. Two names for that term, okay? And let us say that we had this period, we estimate that we have spent $300,000 in manufacturing overhead, correct? Okay. Now, when you start a period, when you start a production period, what will you see? Will you not see some chairs that were started last period but haven't been finished? Like there's a chair, the legs are on, but this thing is not on yet, so it's not finished. So like materials, work in process will also start with a beginning balance, wouldn't it? And that beginning balance will consist of the materials, the labor, and the overhead that we put into the production process last period, but which has not been finished. So let us say that we started with a beginning balance of beginning balance. So let's say we started with $10,000 in beginning, let's differentiate, $20,000 in beginning balance, which is material, labor, overhead introduced in the last period on units that are still being produced, chairs that are half finished, quarter finished, or whatever. This period, when we started, we know that we put in 75,000 in material. We also put 100,000 in, and then we put 300,000 in manufacturing overhead. Now then, at the end, what happens as the units, as the chairs get finished? They're completed. Then they go into an account called
Finished goods.
finished goods. No, finished goods. Finished goods now. Just follow the logic. It's very simple. You took the material, you started the production process. At the end of the period, some of the chairs are finished, some of them are not. The ones that were finished are where? They are gone to the finished goods warehouse. And so a good name for it would be to call it finished goods, right? Right. We could call it something else, but it seems to be logical to call it finished goods, right? The cost of goods sold hasn't happened because until the customer comes and picks them up, there is no goods sold. You haven't sold anything. Have you? You just have finished and put them in the warehouse. Okay. So now, let us say, 90, 195, 495. Let's say that 495 $50,000 worth of chairs were finished, and where do they go? They go to finished goods. Right? And therefore, by the way, if you add this plus this plus this plus this, only up to this point, the total is what, 495,000? The term for that number is cost of goods manufactured.
Can you repeat that, which ones?
Which ones?
Up to this point, all the costs, add them up. Cost of goods manufactured. This period, the cost of goods manufactured was $495,000, of which 450 represents finished goods, which have been transferred into the finished goods account, correct?
What about the rest?
What about the rest?
That's in the
What
work
do you think?
process.
What that is? Work in process still, right? It's still work in process, and it is ending balance. There you go. So that's where this came from, right? It's rolled over. So now in the next period, the 45 is 495 minus 450 is 45,000, right? The 45,000 becomes your. That's where the beginning. That's a very simple common sense notion. We started the period with 20,000. We added some material, labor, overhead. We finished this. We transferred it out. We are left with $45,000, which is our ending balance, but that's our beginning balance for the next period. And same thing will happen again and again and again. Because at the end of any production period, we will always have some materials that are unused. We will always have some chairs that are unfinished. Right? Okay. Now we finished $450,000 worth of these chairs, and we transferred them to a finished goods warehouse. Is that correct? Okay, now, what is happening in their warehouse? Are we going to see some chairs that were finished from the last period that still haven't been sold? All right, well then maybe there is a beginning balance of, let's say, so in the finished goods account, we will start as before with a beginning balance of 40,000. Then we have the amount is called transferred in, right? So we have transferred in of 450,000, right? And we hopefully now will sell some, right? So whatever we sell gets out. Now 490. Let's say we sold $460,000 worth of chairs. Then your finished goods will now have an ending balance, right? And that ending balance, so minus. This will give you the finished goods ending balance. And by the way, the 460,000 that we sold is what we call that? Cost of goods sold. So you got it now? You got to wait for the cost of goods sold. It doesn't happen that fast. Goes through. Now there's your cost of goods sold, and that's your 460, and your ending balance will be. Now, please look at these three simple linear equations. And look at them, they're simple algebraic linear equations. They are very commonsensical, they're not difficult. Use these equations because the problems that you will get on the test will probably ask you what's the raw material used, what's the direct material, what was the material that was, what was the labor. They might give you these amounts of labor missing, saying how much was direct labor this period. It might give you this amount and ask you what the manufacturing overhead was. It might give you this and ask you what's the cost of goods manufactured. So there are variants. If I omit any one of those things, just be prepared to insert that and solve for the equation. Now, if a question has direct labor missing, as well as direct material used missing, see, all I'm saying is, I could ask you a question by simply substituting a question mark here. What's the direct material used, right? I could give you a question where this is given, or this is not, so this is not given, right? And I could ask you, what's the cost of goods manufactured? And if I'm really, really going to be mean to you, I might do this, but you won't. I didn't make the test, so that's my kind of question. I love those kinds of questions, where we have to remember that we can't solve a linear equation with two unknowns. And the answer is, cannot be solved with the information that is provided, but we won't be that mean to you. We'll be simple. But and that's what you can expect. A question mark, something missing in one of those equations, and you have to just remember the relationship and solve for it. That was a question. Which 40,000?
The beginning balance of.
That would be a given. That would be a given because every period you're doing this. So what I'm saying to you is, you just saw the flows. What you should expect on the exam is basically questions that will have one element or something that is missing, and they'll ask you what's the material used, what's the cost of goods manufactured, what is the cost of goods sold. So then you say, oh, I know this, I know this, I know this, right? So if I give you this, this, and this, then and I say, what's the cost of goods sold? You say, oh, all right, this. Sometimes the harder questions might have you solve this, because first you have to solve this in order to solve this, right? So if I give you an unknown here, but I ask you cost of goods manufactured, can you solve it? No, first you have to solve this, right? Then you put that number here. Now when you have that number here, you can solve for the cost of goods manufactured.
Does cost of goods manufactured, does that include is that just the beginning balance or both?
It's the direct material, direct labor, and manufacturing overhead that was introduced in the production process.
Oh, so it's not direct material, direct labor, manufacturing overhead, and
It's-
with?
No, sorry, it's these three elements.
Oh, just those three.
So just expect, that's the kind, so if you remember these equations, please, remember it's very simple, and see how these flows and what the two important relationships, this number goes here and this number goes here. And that's the thing is, if they give you an unknown here and ask you to solve something here, then you cannot solve it until you solve this first and insert it this. So don't say, oh, they didn't give me the information, I don't know what to do. It's just a two-step process. It means solve this, then move here. And same thing with this. If they ask you to solve this, but they don't give you something here, first you have to solve this, then you insert that number, and you can get that number. All right? Everybody with me? Okay. The third type of questions that people were having difficulty with is this notion of fixed and variable cost. So let me give you a very simple example. Let us say that we produce we are a jewelry company and we produce necklaces. And each necklace requires $150 in gold and clasp and stones and whatever. Okay. And each one of them requires 4 hours of labor assembly at, let's say, $10 an hour. So we have direct material cost of $150 in each necklace. And we have direct labor cost of $40 in each necklace, right? So each necklace has a variable cost of $190, correct? Now, we also know that this is not all of the costs because we are missing overhead. Now, how is overhead assigned to each product? What they typically is done is what we call a predetermined overhead. So we estimate the overhead for the entire year. So let's say the entire year we expect the overhead cost to be $100,000. And so this is what your budgeted manufacturing overhead is for the year. Right? And let us say that we apply overhead based upon direct labor hours. So next we have to do is find what is our budget for direct labor hours. And let us say we have budgeted $20,000 direct labor hours during the year. Right? Then each unit will get labor overhead at the rate of $5 per direct labor hour, correct? $100,000 divided by 20,000 hours. So far so good? First thing, please remember the $5 per direct labor hour is referred to as a predetermined overhead rate or a predetermined burden rate. Two names for this quantity.
Why are you dividing? Yo, why?
We have $100,000 in total
Set aside
for the manufacturing overhead, fixed costs, right? They don't change, the rent and all that. But we have to apply this to our product because every product must share some of this cost, correct?
Yes.
So we have to find a formula for sharing. A very common formula for sharing is, the way it is done is, you take your budget for the year, for the entire year, and you divide it by some activity measure. A good activity measure, it could be anything. It could be direct labor hours, it could be machine hours, it could be number of units produced. A very common method that is often used by businesses is to use direct labor hours because the more activity you have, the more labor hours you incur, right? So let's say that this company, and it's a given, look, it's a very simple issue. You and I go to a restaurant and we eat together and we have to find a way to share a bill. Well, lots of necklaces were produced by this $100,000 in common rate. Every necklace must share its bill, right? So we have to find a formula. How do we share this $100,000 in the necklaces produced? Well, one formula might simply be, look guys, why don't each necklace and each earring and each whatever it is get, because you know you have necklaces and earrings, etc., etc. What's the formula with that? The easy way is, let's divide this by the total labor hours for all our products, and every time a product needs 1 labor hour, it'll get $5 in overhead. It's just a formula, okay? Just a way to share a common bill. That's all we are doing. Nothing magical about it. It's a given. You'll always be told. It's not a mystery you have to solve. They'll tell you. This company uses direct labor hours to apply overhead, because that has to be a given. So this is what we call a predetermined overhead rate, or sometimes another name for it is burden rate. So that's first of all terminology, so don't get thrown off. So if you see the term, so if you see a question that says the company applies overhead using a predetermined rate of $5 per direct labor hour, you know now what that means. And you know how it became up. Okay. Now do you recall how many hours did this necklace use? 4 hours, because the labor rate was $10 an hour and they were using 4 hours. So this was 4 direct labor hours times $10 per hour is how we got the 40. That also will be given to you, as I did just now. So how much overhead does this necklace get? 4 hours times, there you go. So manufacturing overhead is 20. So the manufacturing, so if the question is, what's the cost of product, what is the manufacturing cost per necklace? Answer, 210. Everybody with me?
More direct labor hours times $10.
Yes.
What is it?
All given. All will be given. These are not things to be solved.
Yeah, no, I thought you were
We
using
have to
$5.
I have to tell you how many hours the necklace uses. I'll have to tell you what the labor rate is. So these are all givens. This is nothing mysterious. So you will be told each necklace uses $150 in materials. Each necklace requires 4 hours to manufacture. The labor rate is $10 per direct labor hour. You will also be told the company uses predetermined overhead rate to apply overhead to each product. The rate is $5 per direct labor hour. Now, given this information, if I said to you, what is the manufacturing cost per necklace? The answer is 150 plus 4 times 10, 40 direct labor, plus 5 times 4 hours, 20 manufacturing overhead, $210. Okay, what is the prime cost? 190. What's the conversion cost? 60. Right?
So 4 by 5 is the $10, right?
That's correct. Because that's our formula, and that's given to us. Again, I have to give that to you.
The other one?
Look, this $5 per direct labor hour is called your predetermined overhead rate or predetermined burden rate. That's just the name. It may be. If it is, just don't get thrown off. Just be familiar with all the different names that might show up. So don't go, I have a burden rate. I don't remember what a burden rate is. Yes.
Is this the cost of goods manufactured?
No, it is not. It is the cost per unit, manufacturing cost per unit. Manufacturing cost per unit. Or also, another name for this is, and this is a very bad name, but unfortunately this is what it is referred to, is product cost is $210. So another way you could get the same question is, what is the product cost? Answer 210. What's the manufacturing cost per unit? Answer 210. All right? Now, as opposed to product cost, another term you must be familiar with is a term called period cost. What is the period cost in this example?
The direct labor?
No way. What is the period cost for this example? Question, what's the period cost? So same data. I'm not giving you the data. All the data is the same that I just gave you, right? First question is, what's the product cost? 210. What's the period cost? What is the period cost? A period cost is a cost that is incurred as a result of the passage of time and not because of production. What costs here are being incurred as a result of passage of time?
$20
Actually, not $20, but $100,000. The period costs are $100,000 because no matter whether you produce one necklace or 100,000 necklace, what is your cost going to be for manufacturing overhead? Is your rent going to go down if you don't produce necklaces? Is your heat, light, and fuel going to go down when you're then? What at the end of the period? What do you think will be your? Suppose you produce no necklaces. What do you think will be your period cost at the end of the period? 100,000. So that's why it's called a period cost. It doesn't vary by production.
What's the difference between period cost and fixed cost?
There is a slight difference between period cost and fixed cost. There are some fixed costs that are not incurred as a result of passage of time, but normally there is a very, very close overlap. So let us keep it simple and let us sort of view that as synonymous. It's not, you won't go wrong if you think in those terms. You won't go wrong.
So period cost is equal to fixed cost, and you just want to keep it simple?
But there are other elements. I'm just keeping it
Yeah.
simple because there are other elements in fixed costs, and sometimes fixed costs don't necessarily change with passage of time. There are other things that might change them and so on. So it's not necessarily like advertising, sales budgets are items that are fixed with respect to production and how many units you produce, but they really are not necessarily period costs. They're not incurred by period of time. They're incurred as a function of sales budget or something like that. Okay. But in this example, 100,000 is both the fixed costs as well as it is also the period cost, and they will converge in there. Okay, all right. Now then, here is the final question that a lot of people, so these are the variants on this data, correct? The kinds of questions different. Here's the one question that a lot of people got wrong. So it's morning, think hard. Now, what you're given is all this data, and you're told that, here it is, that this 190 is your variable cost, and $20 is the applied manufacturing overhead, and 210 is your product cost. And there are no other costs, just to keep it simple. No selling, no administration costs, for just simplicity. Okay, just to keep it simple. And you're told that you are producing, let's say, 50,000 necklaces right now. And you're fine, you're doing fine. Sorry, not 50,000, let's say 15,000, because 15,000 direct labor hours times divided by 4. So let's say you're producing about 4,000 necklaces, approximately, right? And you are selling them at a certain price. Now, a customer wants to place a special order, right? And the special order that they want to place, they want to pay you a price of $200 per necklace. Okay. The question is, if you were to accept this order, your income will drop by. So the order is for 1,000 necklaces, right? If you accept this order, your income will increase, decrease, and by how much? What do you think will happen? Decrease. It will decrease by
10,000.
10,000. Okay, that's one answer. All right, anybody else? Because we have to have multiple choices of 4 answers, so we need 3 more to make up our multiple choices. So that's one, increase by 10,000.
None of the above.
It depends on your direct labor.
Well,
More-
don't ask me what it depends on, just tell me what you think.
Well, your
is,
direct labor, if you're producing like more at one time, your labor cost may be different. So.
The data is there, but on the
It's gonna
exam,
take you- it's gonna take you
I'm not going to
4
be
hours.
there to forecast this.
But what I'm saying is that it's still gonna take the 4 hours to produce 2,000
Yes,
necklaces.
everything is unchanged. The basic data, nothing has changed. Same direct material, 150 per necklace, and $40 in labors per necklace, and $100,000 in budgeted overhead. We're not changing any of that. The only thing we are changing is the following. We were going along our merry way, we were selling 4,000 necklaces, and everything was fine, and then we had this customer come in with a special order, but they said, what I want to do is buy another 1,000 necklaces, but I will not pay you whatever 250, 260, 270 that you are charging currently. I'm only going to pay you $200 per necklace. Now, the question simply says, if you were to accept this order, for 1,000 necklaces, your income will drop by, one answer was drop by 10,000, another could be increased by 10,000, or doesn't change, is not affected.
Your profit
Actually,
drops,
if
but
I
not
were
your
to divide
income.
the 100,000 into more,
You're still getting
so it would increase.
Well, how much do you think it will increase? Again, you see, there will be
It'll
answers
increase
like increase by 10,000, decrease by 20,000, and whatever it is, we have to pick a number.
It's gonna
So
increase.
please tell me, what do you think will happen?
Don't you add the direct materials and the direct labor since they're variable costs and times by the number of units?
If I produce these 1,000 necklaces, will I incur another $150 in cost?
Yeah.
Yes. Okay.
$40 and $190.
Do I also incur the $40 in labor? Yes. Do I incur additional overhead of $20?
No,
Yes.
no,
Yes.
not part of the budget.
No,
What was it that we called a minute ago, this cost, we called it what?
Fixed cost.
What does the term fixed means?
Doesn't change.
It doesn't change. So why would you think it changes, right? So if you produce 4,000 necklaces, it's 100,000. If you produce 4,001 necklaces, it is still. And if you produce 5,000 necklaces, it is. Okay, so now we know that we for sure will incur $190 in additional cost. But are we going to incur this $20 in additional cost? No. It's already been incurred in the $100,000. It doesn't change. It's very simple. So if I sell it for $200 and my cost is $190, I am still making. And what is the accounting name for this $10, by the way? We also call it a contribution margin. As long as your contribution margin is positive, which that's above 190, as long as the contribution margin is positive, every additional unit will actually increase your profit because that's where the fixed cost effect comes into play. The fixed cost will not change.
So you're still producing regular
Yeah,
necklaces and that,
that's
this
right.
is just an
Remember
additional
special order? This is a special order for an additional one. That's the magic phrase. Watch out for the magic phrase in that question. Watch. It's not a substitute. It is an additional 1,000 units of a special order, except the customer is unwilling to pay your regular price. They will only pay you $200.
You say 1,000 orders, so I was gonna say the variable cost times 1,000.
Yeah, right. The number will be, since it's a 1,000 necklace order, each necklace is going to give you $10, so it's $10,000. So if it's per unit, it's 10. If it is the total amount of income increase or decrease, it's 10,000. That's
The
correct.
contribution margin is revenue minus variable cost?
Yes, that's correct. That's your, and as long as that contribution margin is positive, every additional unit that you sell is going to contribute to profits because your fixed costs are not changing. They're the same.
Right, so you're saying that those costs are already allocated a certain amount of units, obviously, correct?
Actually, what I am saying is that allocation that you just saw over here has no bearing on the decision of whether to accept or reject this order, because this $20 was what we call done for product costing purposes. we have to have a balance sheet. And on that balance sheet, we have to show necklace inventory, and we have to assign a number to it.
Okay.
So that was the purpose of this particular exercise.
So if they accepted the order and actually produced it, then would they have incurred the cost?
Yes, they have incurred $190 in costs. Yes, we agree. They have incurred $190 in costs, but they are getting $200 in revenue. So they are still increasing their overall profit by $10 per necklace. If they sell 1,000 necklaces in this special order, their overall profit is increased by $10,000. Okay, so the term contribution margin is important to remember, and the principle you are learning is when you see this number, $20 per necklace, it appears, see the mistake that students make is when they see this $20, they forget that this 40 and this 150 and this 20 are not the same animal. They are not all being multiplied by the number of units produced. This you can multiply by number of units produced, this you can multiply, but this is not a multiplication, this is a division. This comes from that total fixed overhead budget of 100,000 and the budget of 20,000 for direct labor hours. That's how we assign this $20 number. And that's what you have to keep in mind. The term fixed overhead means that that part of your cost will not change.
See, that's why I'm confused at, because why would you be using $20 if you're making the necklace?
Because do you incur another $20 when you make another necklace? Just ask it. No. Because it's only a division, it's an assignment, it's a sharing. You remember I said to you, why did we need the $5 per direct labor hour?
Use more examples of what the fixed costs are, like security of the building and stuff like
what we
that.
talked about,
Oh.
rent and security, these don't change. Whether you make 4,000 necklaces, that's why it's important to remember. What you did is you were fine. We defined it, you understood it, you said that's what goes into it. But the minute I make this backward shift, what happens is we lose that concept and we say, oh, it's just like this 150 and this 40 and this 20, and every time I make another unit, it's going to cost me 210. And that's not what it costs you when you make an additional unit. And that's the key difference between costs that are variable and costs that are fixed. As I said to you, that's one of the concepts that people have been missing, is this concept. All right?
I got a little confused now when we're talking about it. So which unit do you apply to $20? The first unit?
No, you apply it to your budgeted units. You had budget at the beginning of the period, and your budget called for 5,000 necklaces, right? Each necklace was using 4 hours, so you had budgeted 20,000, right? Now, that was your original plan, and you had 5,000, and you were going to do this. Suddenly, somebody came along, and they said, I want to buy another 1,000.
Oh, okay, that's this.
Then remember, then it's nothing happened to your original plan. Somebody just came along and wanted a special order, another 1,000. So now you have a chance of going from 5,000 necklaces to 6,000 necklaces. But going to 6,000 necklaces doesn't increase this part. It only increases this part. All right? My time is up. I'm going to turn you over to the capable hands of Professor Kinderman, who's in the back, and will take you through stats. All right?
Thank
And good luck.
you.
Amazing.